Hi, Simeon. Can you hear me?
Yes, I can hear you.
Hi, nice to meet you.
Nice to meet you too.
All right, I am starting the link. I'm also recording for my channel, just to give you a heads up.
Yes, I understand.
And we'll get started. It is 6 o'clock.
Could you tell me a little bit about the software that you're using to trade?
I am. I'm gonna start. We're gonna start at the very, very basics tonight.
Okay,
Give me
perfect.
just a second.
I'm on an iPad. Do you think that would work, or do I need to buy a laptop?
I would recommend that you need a laptop for sure.
Okay, so for right now, I'll just write everything down.
Yeah, for tonight, I would say it would be cool to go ahead and just take notes
Okay,
and write everything down. And then from there, I would say you want a laptop that is ideally at least 16 RAMs. The
okay,
more, the better. The more power, the more speed you have, the more memory makes it quicker. But 16 RAMs is the minimum you want to have. And a PC, ideally. If you're choosing between an Apple and a PC for trading, I would say use a PC. A lot of the platforms are PC compatible and not Apple compatible.
okay,
So I'm just going to start at the very, very basics about what futures are and how to read the chart. Um, just so you can see, this is an active candle. So the market just opened. So
okay,
you're going to have to get a TradingView account. This website is TradingView, tradingview.com. You can see it up here, tradingview.com. It gives you live data for the market and for various markets. We are trading the S&P 500 on futures. And so you will purchase access to live data, and then you'll purchase the bundle for the CME after that. And I'll walk you through that when you're ready to do it. But this
okay,
cost approximately for the bundle and the access total about $17 a month. I know it's
okay.
under $20.
That'll work.
Yes. So whenever you're ready to do that, let me know and I'll set up a one-on-one with you and then I'll walk you through how to do it.
Okay,
But you'll go to tradingview.com, you'll create an account, and then the chart that we are going to be trading on is the S&P 500. So when people trade futures, you can trade any commodity and or instrument is the term you'll hear people use. The S&P 500 is the top 500 companies in the country that are essentially traded like a bundle. You're not trading individual companies. You're not trading Meta, Tesla, Facebook, Amazon, or Home Depot or Walmart. You're trading the entire index of the top 500 companies. And we are chart trading. Chart trading means we are looking at candlestick patterns and determining which direction we believe the market is going to move in. Because
okay,
there's different ways to trade, but I teach trading off of a chart through chart patterns. So you can trade other commodities, like let's say over time, after I give you the basics, you may want to switch to a different type of commodity or instrument. I'm teaching you on the S&P 500, but that also correlates to the NASDAQ. Once you learn the skill, you can trade the NASDAQ. Are you familiar with the term NASDAQ?
somewhat.
So the NASDAQ is essentially just all technology companies. So it would be like Tesla, Facebook, Apple, Microsoft, where the S&P 500 also has like brick and mortar companies. They don't just have tech companies. They have Walmart, Target, Home Depot, um, Caterpillar, like any of the top 500 companies that you've heard of outside
Yes.
of tech. So it has the top 500 regardless if they're tech or not, and NASDAQ only has tech. Then
Okay,
you may have heard people say, I trade gold, I trade oil, I trade silver, I trade pork, beef. Like there are tons of things you could trade. Grain, people trade grain like corn or wheat.
okay,
Once you learn the skill, it's transferable from market to market for the most part. However, there are things for me, I like honing in on one particular market because once you know one market, um, you know what makes that market move. like certain things make the certain markets move differently. If that makes sense. Like
Yes.
I certain data reports make the S&P move in a way that I understand. I would
Hmm.
have to sit back and study gold and see what reports make gold move the way it does. And so in general, once you know how to read a chart, you could probably, for the most part, trade any commodity. However, there are certain other factors that can make the market move in other ways that you might need to stay up to date on.
Hmm.
So that hopefully, does that make sense?
Yes, it
Okay,
makes sense.
cool. And I do have, I believe, a couple people on the live stream. I hope they can hear me. Let me check something really quick. I don't see anybody in the chat, but I think we're good. All right, so on this chart, I just want to give you some basic things. Price is on the vertical,
Okay.
and time is on the horizontal. The time normally is in hours, military time. And I currently have my chart set to the 1 hour candle. So every one of these candles represent what happened within an hour.
Hmm.
Okay. When I'm trading, I'm normally assessing various time frames. The 1 minute, I'm gonna switch to the 1 minute candle. So the market opened today at 6 o'clock, but that's 1800 here. Do you see 1800 at the bottom? Highlighted. Sunday, August 23rd, 1800
Yes, I see it.
hours. So the market opens on Sunday at 6 p.m.
Okay.
But in military time, it's 1800. But each one of these candles from this point forward has been 1 minute that the market's been open.
Hmm.
On the 5 minute candle, this was the first 5 minutes, and then this created a new 5 minute candle. And if I go to the 15 minute candle, we're still within the first 15 minutes of the market. So it's all of those candles within this one candle for the first 15 minutes. Does that make sense?
Yes, it makes sense.
All right. And then there's a 30 minute candle, 1 hour, 4 hour, day. So this is the day chart. All right. So I have these favorited. And once I'll help you go through and set yours up so that it's easy for you to navigate however you like. But I like to refer quickly to when I'm actively trading to various candles that can give me insight about what I think the market's going to do next. All right, so I can go back and forth very quickly. And they're easy to do. I just starred them. Like down here, you can pick whatever you want. I don't use the 10 often. I don't use the 45. For various reasons. Sometimes I like to look at the month view. Sometimes I like to look at the week view.
It just depends on personal preference.
Preference and what am I trying to study at the moment?
Okay.
And what I'm trying to study at the moment. And when you trade though, like I can show you a move that I did on Friday really quick just to give you an idea. On Friday, I don't always trade on Fridays, but this Friday I saw an opportunity, so I took it. So this is Friday morning. I'm going to go to, I'm on the 1 hour. So at 9 o'clock in the morning, there was a huge drop down. And I got in at 10 o'clock because I assumed that it was going to be a big push back up for a lot of reasons. I made that assumption. One is because overnight, the market went up. All of these candles are from overnight. So this started from about 2 in the morning here. But let's go. Because remember I told you the market opens at 6 p.m. on Sunday.
Mm-hmm. And it stays open until the end of the week.
It will not the S&P 500 futures. It closes at 4:59 every weekday for an hour. So it closes essentially at 5 p.m. and opens back up at 6 p.m. in the evening. So it closes 1 hour and it stays open. When it opens at 6 p.m. in the evening, it'll stay open until 4:59 or 5 p.m. the next day. It's a 23/5 market. So it only closes for 1 hour during the week. And on the weekend, it's closed. So once it closes on Friday at 4:59, it doesn't open back up until Sunday at 6.
Okay.
So you do have lots of flexibility. and trying to pick when you want to trade. Like I know you're in college, like around your class schedule. You can
Yes, ma'am.
trade at night. You can trade early in the morning. Um, and they're very, so the session right now that opens at 6 p.m. is considered the Asian market.
Okay.
So right now we're in the Asian market. The Asian market goes from about 6 to about 2 in the morning. In 2 in the morning, it's called the London market. The London market opens. Now
So
you can
could you repeat
trade
that
all
last?
of these time frames, but that's kind of when the London, because they're ahead of us.
So you said 6 to 2 is the Asian market.
Asian market, and then 2 a.m. essentially till we start at 9:30 a.m. is the London market. So 2 a.m. to 9:30 a.m. is the London market, essentially. And that's not, honestly, that's not completely true, but their market opens around 2 a.m. And then the U.S. market, when you hear people say the stock market, the New York stock market opens
Yes.
at 9:30. So
And then
our
what time?
stock market opens at 9:30 and our stock market closes at 4:59 p.m. Because
Okay.
truly the London market really closes closer to 11:30. So they open at 2 a.m. There's a little overlap with each one. So there's a little overlap between the Asian and the London, and there's a little overlap between the London and the American.
Hmm.
All right, so those are all the various times. Asian market 6 p.m., London market 2, and then American 9:30. And then they close for just an hour every evening, except for when it closes at 5 on Friday. It's closed the entire weekend and then opens back up on Sunday evening at 6.
Okay.
Okay, so I'm sorry, I'm gonna talk you through Friday really quick. I hope I didn't throw you off. So what I noticed what the market did overnight and into the morning. It pushed up, it pushed up. This is not always indicative, but there's patterns or what they call algorithms to the market. So once I saw
Okay.
the market push all the way up overnight, there tends to be a bit of a retracement, is the word they use, where the market comes back down and recaptures some of the liquidity that it created overnight before it can go back up. So even if the market wants to go up, it can't generally go up in a straight line. It has to come back down, recapture some liquidity, and liquidity just means money. Recapture some money that it left behind overnight just so it can go a little higher. So once I saw this huge drop in the morning, I said, you know what? I'm pretty sure the market's going to continue to go back up. It just needs to recapture some liquidity so it can go a
Hmm.
little bit higher. And so I was able to jump in this trade at 10 and ride it up to 11.
If you don't mind me asking, how much did you make off of that
That's a
trade?
good question because I'm going to go to that next. So this is how you make money in the trading futures. These
And why is
numbers
it
on the
called trading
left, I'm
futures?
sorry, on the right side. I'm sorry, honey, say that again.
I said, why is it called trading futures?
Oh, futures. So futures is it's not stocks because we're not trading individual companies, and it's not options. I don't know if you ever heard options.
Yes, I've heard of it, but I don't know exactly what it is.
So options are like derivatives. And so futures, essentially, we are trading what we believe will be required for the economy in the future. We're not trading true value for today.
Okay.
So the Dow, when you go, like if I go to you've heard the Dow market before.
No.
Let me go to S&P. Okay, here. So if you ever go to CNBC, this is another website you will have bookmarked and refer to regularly. But CNBC is our financial market news. The Dow Jones is like what the markets are trading kind of in real time. The futures market is what you anticipate will happen in the future. It's not real time value per se.
Okay.
So I'm trading a contract about what I think will be needed in the future. So for example, it seems really abstract right now, but I'm trading a September contract in August.
Okay.
I'm not trading for August prices. I'm trading for September's prices.
Are you able to trade for August prices?
You are always trading in the futures market in the future.
So,
So if you wanted to trade current prices, you would trade stocks.
okay.
So which is slightly different. In futures market, you don't, for example, the only way to really make money in stocks is to buy low and sell high.
Hmm.
Does that make sense?
Yes, I understand.
In the futures market, I don't care if the market goes up or if the market goes down. I make money in either direction. I just have to be correct in my assessment.
Hmm.
So for example, if I had gotten this opportunity to sell, I would have made money when the market went down because I would have just sold a contract because you're in futures, you don't own the underlying asset. I am just um, giving my best estimate to someone on what I think the market is about to do. And essentially, I'm betting someone to bet opposite of me.
Okay.
Does that make sense? I hope that makes sense.
No, I understand what you mean.
So I'm not betting or like owning the right to an asset. I don't care about the asset per se. I am betting that the market is going to move in a certain direction. And as long as I'm correct, whether it goes up or if it goes down, I can make money.
Hmm.
So when your question was, how do you make money?
Yes.
So this is price action here on the
Okay.
right hand side. And I'm going to stretch it out so you can see it. I want you to see some of the numbers really well. And I'm going to go to a smaller time frame so I can show you where I cut in and what I was able to do. And this is also, there's two things. This is the ES, which is the S&P 500.
Hmm.
I technically trade on the MES, which is the micro version of the ES, but it's the same. It just means that I'm trading smaller contracts. The ES is called a mini contract, and I trade on the MES, which is called a micro contract. But essentially, on the ES, for easy math, each contract is worth, or one tick in a contract. So I'm getting ahead of myself again. I'm making this bigger. Okay, so you see the numbers here. So look at 681. I'm going to stretch it even further. I see 681. Then you see
Okay.
7681.25, 7681.50, 7681.75, and then 7682.
So essentially, you're making 25 cents on each.
Not quite. So in the ES market, there are points. Each point is like a whole number. So a point would be 7680, 7681, 7682, right?
Okay.
But within each point are 4 ticks, and that's where you get the quarters, right? You get 80.25, 80.50, 80.75. In the ES market, which is the mini market, every tick is worth $12.50. So every one of these ticks, which is a quarter points in between a point, so every point has 4 ticks. Every point has 4 ticks. Each tick is worth $12.50. So when I got in the trade for the market to go up on Friday, I got in. I don't know, did I get in? I think I got in very close to this area. And we'll talk about candle structure, but just very easily you could see that for whatever reason, these 5 candles all kind of have a spot right on this line. Does that make sense?
Mm-hmm.
You can kind of see that pattern easily without even knowing anything about candlestick patterns. And I was able to say that for whatever reason, price is holding here. And I already had a bias that the market was going to go back up. So when price started to hold here over time, because this is on the 15-minute candle. So between 9:45, 10, 10:15, 10:30, 10:45, the market finally decided to make a move to go back up.
Okay.
I was able to get in a buy here. So let's just say, and I'd have to go back to look at my map, like my actual trade, but I got in, you can say in this area at 76, just for easy math, let's say 76.82. All right.
Okay.
I got in a buy. I'm going to show you where my target was, and I'm going to show you how I found my target. And over time, it'll make sense to you. My target, I'm going to go to the 4-hour. So we were on a 15. I'm going to go back to the 15 in a moment. But when I find targets, I normally find my targets on the 1-hour and the 4-hour.
Okay.
So the 4-hour candle opened up at 10 o'clock. So when the market made this huge push down here at 9, you can't see it on the 1 hour. I'm sorry. I'm gonna go to the 1 hour for just a minute. I think you'll be able to see it easier. Let me see, 1 hour. Okay. When the market made this huge push down on the 1 hour,
Mm-hmm.
the structure I want you to see, you're not going to see. You're going to see it on the 4 hour better, I think. When the new, so this was the high. Let me go to my data window. On the 4 hour candle, this is a 4 hour candle. So it opened at 6 and it closed at 9:59.
Okay.
When the new candle opened at 10 a.m., knowing what I know about how the market moves sometimes in predictable patterns, I said, okay, when the new 4 hour candle opens, it's going to go back and recapture the high of the previous 4 hour candle.
And it's going to go beyond that?
And go a little bit beyond it. And I'm going to show you where I found my personal target of where I thought that beyond would be. My, this high, so the 4 hour high was 475. And you can't see it on the 1 hour. I'm going to go to the 30-minute. I think you'll see it on the 30. Okay, yeah. So some of these terms will make more sense as you get used to hearing them. But this was the 4 hour high. It happened at 8:30. It went up. If you see my little box all the way to the far right, you see little numbers in this box.
Yes.
Over here, and it shows you the high. I'm going to touch that candle, and it's going to show you what the high was. You see it says the high 7,704.75.
Yeah.
On the 30-minute candle, do you see this green candle over here?
Yep.
And what is its high?
7,704.75.
It has the exact same high, which creates it's called a double top on a 30-minute candle, and it's a high liquidity target, which essentially means there's lots of money there.
Mm-hmm.
So I said, okay, when the market comes back up, and that's another reason why you kind of flip back and forth between various time frames. It's because you're trying to find confirmation of what you believe is going to happen. And you can find that confirmation by flipping back and forth from various time frames, because the market does move predictable in terms of liquidity, which is essentially money. It's trying to find money or orders. And you can find hints to where that money is, like a double top or a flat top or a short wick. So this gave me confirmation. Okay, when the market goes back up, it's at the very least going to go here. I was pretty sure about this target, but I said, let me see if there are any other liquidity targets close by that it might also snatch. And I said, okay, this one goes up to 7 on the 30-minute. And then there's this huge wick that goes up to 20. I wasn't sure if it would go that high.
So what happens if you're wrong?
You lock in as much money as you can and you get out. You don't wait. My philosophy is I'm going to get my first short target. And if it goes beyond that, cool. If it doesn't, oh well. But I'm going to lock in what I'm certain about. Does that mean? And I would have to show you in a live trade what that means. It's how to lock in your winnings.
And live trades are Mondays and Wednesdays, right?
I look every day.
Okay. I
mean, I trade every day, but I look every day. So my target was here. So just to answer your question, I put my take profit target at 475 because I was certain that the market was going to go there. So now you want to do math. People always ask me, is there a lot of math involved in trading? Not really. So our high was 7,704.75. So now you subtract 7,704.75 from, we got in down over here, remember, around 682. So now you subtract those two numbers, and what do you get?
So you subtract 7,785, correct?
Yes, 0.75. 7,704.75 minus 7,682. You should get like 22.75.
Okay.
Is that what you got?
I I was writing down the numbers. I couldn't get
Oh,
the
okay, okay.
numbers.
I'm sorry. I don't
Yeah,
want to be. I want you to get practice doing it. So I'm gonna be quiet.
and that's fine.
So you can tell me what number you got.
Could you repeat the first number real quick for me?
Yes, it was this number here. So if you can see it on the screen, the high
700.
7,704.75.
Okay, and what was the second number?
And we got it down here around 7,682.
Thousand. One moment, I'm doing the math currently.
Oh, you got it.
I've never been that good at math, so
Like, use your phone calculator. I'm not that good at doing math in my head either.
it's 22.75.
Yes. And remember, that's points. So we just subtracted points, remember?
Mhm.
And how many ticks are in each point?
4.
So you multiply that number times 4.
So you get $91 off that trade.
Nope. You got 91 ticks.
Oh, 91 ticks. So then you times that by $12.50.
Yes. And how much money did you get?
$1,135.
Yes, sir.
And so you're taking your personal money and investing this in futures, or are you just buying with nothing?
Say that one more time, hon. I couldn't hear you.
So are you taking your personal money and investing in this and getting money back, or are you just
Good question. So what I tell my students is I don't advise anybody learning to use their own money or cash because you're going to lose as you're learning. What I have my students do is learn on a prop account, which essentially is, if you think about it, kind of like monopoly money, essentially. There are
yes?
companies that will give you the opportunity to practice your trading, essentially. For, let's say, a practice account, generally costs anywhere between, depending on the company, you can get them for as cheap as $50, as much as about $150. So for a month, they give you 30 days to practice trading in an account. And when I say practice trading, they give you parameters. They say, hey, I want you to practice in this account, try to earn $3,000. Let's say you practice with a $50,000 account. They say, I want you to earn $3,000 in profit in 30 days on this account. So they give you like monopoly money to play with. You're going to practice the trades, like taking trades in the account. And let's say you are successful, though. You earn the $3,000 they tell you to earn in that month. Then they say, oh, okay, this kid might know how to actually make money. Let's give him another practice account, but this time he can earn actual money in this account. So they're going to give you the same account again, right? They're going to give you $50,000. And essentially, it's like, say, monopoly money. It's not real money that they're giving you. However, you can earn money with it. And I know it sounds weird, but
Yes,
they're
I'm.
giving you the ability to earn money now in the same account. So they say, hey, if you now earn over $2,000 in this account that we give you, a simulated account, anything over that $2,000 you can take out and have.
Do you know any companies off the top of your head?
Yes, I use Take Profit Trader. Is currently the one that I enjoy the most, but I've used a couple other ones, My Funded Futures. But Take Profit is what I would probably recommend right now, or Tradeify. Those are the
Okay.
three I would tell my students to use: Take Profit Trader, Tradeify, or My Funded Futures.
And what made you get into teaching people?
I enjoy it. It's really, really fun, to be honest. I used to, but and I have education background. I used to be in education for 20 years. I was a high school principal in the last 10 years, but I used to be a teacher. I started out teaching to about 20 years ago, but I stopped in education as a principal.
Oh, okay.
So teaching comes naturally, but I really, really enjoy trading.
I understand.
And so essentially, hun, if you were in a prop account and you had already got past, that buffer of $2,000 where they say, hey, anything over $2,000 you can have, and you were in this trade and you made $1,100, you would just withdraw your $1,100 out.
Hmm. So eventually, once I learn more, I would invest my own money.
Yes. Now, yes, over time, once you got better, you could put your own money in a brokerage account and trade your own money. And whatever you make that day is yours. I just tell people don't do that in the beginning because you are essentially going to, one, it takes a lot of money to like leverage to get in a trade. Like to do this trade with your own money, I would say comfortably needed at least about $2,000 minimum in account to
Okay.
even be in a trade. Does that make sense?
Yes, I understand.
Versus you can pay $100 and get in a practice account and learn. And when you lose, you've only lost $100 versus losing 2,000.
Hmm.
And you also get the added benefit of if I get good and I'm using other people's money, I can still make money. But 100%, you can use your own money. I just would not advise you do that in the beginning because it would require too much upfront capital that you are more than likely going to lose.
Okay.
Does that make sense or does it answer your question?
It makes sense. It
Yeah.
answered my.
And so, but that's how you make money. But we made this in a trade going up. But if let's say you got in this move here on this down move, you could have made money going down. All you had to say is, you know what? I can tell that the market has kind of topped out here. I think it's going to do a retracement. I'm going to get in a sell. You would do the same, same calculation. Get up here, get in high, and then get out low. Same
Okay.
ticks. The ticks are what matter. It doesn't matter the direction. You got to be correct in same ticks, up or down, same money.
So when you say sell, get in high and get out low,
Yes.
how does that exactly work? So you're just betting on the fact that the market's going down?
Yes, exactly.
Okay.
So I'm gonna show you what it looks like an actual trade. I'll get in a sim account for you. Let me go.
And you wouldn't necessarily do that for, say, for instance, I was using my real money. You would still do that?
Yes. Yes.
Oh,
That's that's essentially how you trade. I'm gonna show you like the trading platform. And you can just see kind of what it looks like to execute a trade. In this particular setup, I believe the market might go up a little bit. And there's a flat bottom down there, so it may not go up much. There's what you would call, you see lots of candles in the same zone. It's
mm-hmm.
considered, the word that's used is consolidation is the term. The market is kind of consolidating right now. Hasn't really made a true directional move. But there's a setup here that kind of looks like the market might push up. I don't know what price looks like right now. Oh, price is currently negative. And I haven't studied it. I just want to show you what it looks like to trade, how to execute a trade, just to see it. I would get, and I'm going to do it in a sim account because I haven't done any studying at the moment.
Okay.
But I'm just going to get in a fake account. So it's total simulation. So let's pick a target. It's kind of, it hasn't made any real move, hun.
Mm-hmm.
But, so this isn't to me ideal time to trade. But I just want to show you how you execute a trade. Where was the open? Oh, this was open. It's not moving a lot. I'm trying to, it's going to be pointless to get in something and the market's not moving. Sundays, generally, you can have a decent, I don't, in general, I don't enjoy trading at night because the market's slower at night.
Mm-hmm.
However, Sunday nights, you can get decent moves, but it's still very early. The market's only been open 30 minutes.
Hmm.
So it's still trying to figure out, what the direction that it's going to move or whatever. But generally, I don't trade in. I like to trade in the morning when the market's moving really quickly. Um, it's just ticking along. It's not moving. But let's do a sell. I'm going to get in a sell for the moment just so you can see it. So when I say buy, you can see over here, there's a buy market and a sell market. If I wanted to get in a trade it's still not moving much. I wanted to do something. Oh, there's a 5. All right, there's a new 5-minute that just opened up. The market tends to move. It has its most dramatic moves on 5s, 15s, 30s, hours. So new 5 just opened up. So let's see, I'm going to do buy. I'm going to click a buy market. Filled. Of course, it immediately sells. But I have I have a strategy set up. So just executed a strategy that I have set up already in my account. Like I have my stop loss set at a certain amount of money. It won't let me lose more than I've said I want to lose.
Mm-hmm.
So in a buy, my stop loss is going to be below me. It won't let the market turn against me, but so much. And then I have it automatically set at a target up front. But these are movable. Let's say if I were truly getting in a buy, the best opportunity, let's say I want to go at the top of this candle. And the top of this candle, the high is 76.95. Like when I told you earlier, I had my target set at remember 7,475. Remember that for the trade I took on Friday?
Yes.
So let's say it automatically didn't go exactly where I wanted it. I can just drag it and move it where I want it.
Oh.
So I just said I'm with the top of this candle here is at 76.95. I just dragged it to where I want it. Right here, 76.95. So now it's moving up towards in my direction. And you never want to move your stop more than you're willing to lose. I have it set, no matter what, 8 ticks away. And depending on how many contracts I'm in, that 8 ticks is anywhere between $100 to $50 loss. That's the most I'm willing to lose.
It shows you the dollar amount that you're.
Yes, because that's how I have it set on dollar amount, but you can have it set on percentage. You can have it set on ticks. You can have it set on the number of, but I like to show my dollar amount. So I know exactly at any time how much money I'm winning or losing. And so I have it set on dollar amount, and I don't ever, this is movable. Like I could move it, but I tell my students, you don't move your stop. You have it set to protect you. You don't want to lose more than we've already predetermined in any given trade. And that is anywhere between $50 to $100 per trade. So generally, don't move your stop. But the market's just kind of consolidating. It hasn't made any move or direction. So we can just try to see what it does. But I just want to show you how you execute a buy or sell. So right now I'm in a buy. Let's I just closed it out and I wanted to show you how to execute
order filled
a sell. All I do now is I hit, it'll be exactly what you just saw, but in opposite direction. Filled. Because I'm in a sell, I want the market to go down. Up here, it's never going to let me lose more than $100. This is my stop. My stop is high now because I'm in a sell. I'm thinking the market's going to go down. And same thing. Can you move it? Yes, but don't move it.
So you want to sell low?
Sell is you want it to go low. You think it's going to go down. So I would move if I found a target. Let's say if I found a decent target below. Let's say we want to go at the bottom of this candle, 77.25.
So you would want to buy that?
No, I sold. I got in a sell. So right now I'm in a sell. I'm moving my target wherever I think it would go. Does that make sense?
Stop
so see, it took me out because I was in a sell and it moved up. It's going against me.
Mm-hmm.
So we were in a buy, but I got out of a buy just so you could see what a sell looked like.
Order
so we put back in a buy because now the market's moving our direction. We get in the buy. Now, generally, don't chase unless you're certain about the move. I tell my students don't chase trades. But generally speaking, you could reverse, like If you
So,
kept, the smart thing about keeping your stop where you are, where it's meant to be, let's say we were in a sell, right?
mhm.
And they said, oh, the market's going up. You keep your stop low. It took you out. You only lost $50. You can say, okay, I'm going to go back. I think I got it now. The market's going to go up. I'm going to get in a buy. You've only lost $50. You can recover that $50 relatively easy. Get in the buy and now make that $50 plus some. However, what people tend to do is they move their stop. Let's say we were in that sell and we moved our stop because we wanted to give it more room, and you end up losing $500.
Mhm.
It's harder to say, let me get in another trade and try to recoup that. You can recoup $50. You're not probably going to recoup $500.
So when it comes to buying, right?
Mm-hmm.
Say for instance, I wanted to buy one of these candles. I would look to buy where it's high, or
No,
because
when you
that's my
want to buy,
confusion.
you want to buy low.
Okay, so you want to buy low and then sell high.
And you're not selling, you're just closing. So,
Well,
yes. So, like, how can I put it? When you execute that buy button, when I
mhm.
execute this, when I got in this buy, somebody was selling. It's an exchange. Somebody was betting against me at the same time.
Oh, okay.
Does that
So
make
they think
sense?
it's going to go down.
So yeah, when I got in this buy, somebody is like, oh no, I think it's going to sell. So you're in a transaction with somebody. That somebody could be a company, that somebody could be a person, but you're in an exchange.
So you're betting against them essentially on whether
Exactly.
it's going to go up or down.
Yes.
Are you betting whether they're going to buy or sell too?
I'm only betting on what I believe the market's going to do.
Okay.
So I don't care what they're doing. I'm only focused on, I believe the market's going to go up. I'm going to get in a buy. I want to get in at this price. This tells you the price that you're willing to get in at.
Mm-hmm.
I'm not willing to lose. If the market goes below this, I'm out. It takes me out. But I believe the market's going up, and I believe it's going to 76.90, 250. Now, what you can do, the market's not moving very much, so I can't show you. But in theory, this tan number here is
Mm-hmm.
break even. So as it gets up here, you'll see it'll go to zero. Watch, it'll go to zero. And I'm going to be break even again. All right, perfect. Now I went over the tan line, so now I'm positive. So I'm going to try to stay in this. Let's see if it'll go. I think it's going to go up. Where are we at? There's going to be a new 15-minute that opens. Great. I think I can show you what I want to show you now. When I told you earlier, lock in. So let's say I'm up $25, right? I can move my stop loss up and lock in a certain amount of money. So no matter what in this trade, I can lock in. Let's say it starts to come down and it doesn't reach my target. I've locked in whatever that tick difference is between my break even and that target I'm at right now.
Mm-hmm.
So you can lock in certain amounts of profit along the way. Like, let's say does it, because I could be wrong. Let's say it doesn't go all the way to my target. I'm wrong. That's what I think, but I don't know. The market can do anything. Now, when I get over my break even, I've locked in, it could just be $25, it could be $100, it could be whatever, but I've locked in a guaranteed amount. Even if it doesn't go to my target, I've locked in $37.50. Oh, now it's $50. Now it's going closer to my target. I can inch it up a little bit more if I want to. As a beginner, that could be smart. I only do that when there's the super volatile market. Otherwise, I don't trail. I only trail the market when I'm unsure. If I'm super sure, I don't trail because sometimes the market can turn against you, but it's a fake out. It's not a real move. And then you have to try to find another entry point to get in. Rather just let my hypothesis play out. But if I really don't know, then I'll trail like I'm doing now. I'm going to bring my stop up every little time I think I get a chance to. So I can lock in a certain amount of profit no matter what. Does that make sense, hon?
Yes, that makes sense.
So yeah, So like right now, no matter what, I'm gonna make at least $50. But if I'm confident, just let it play out, or you can try to trail it. Let's look at this. So I think, did I have it up here at 695? This structure tells me it's going to come up to here, but I don't know. Where is my target? I don't have it quite at 695. Let's see. Now every time there's probably a new candle, I'm going to lock in some more profit. And it may come to this flat top here and then bounce back.
And come back down?
And come back down. Maybe a little bit. It may not come all the way back down, but it might come back down a little bit. So right now I'm at 68. I'll lock in $68. Let's see.
Stop filled.
There you go. It took me out. So did that answer some of the questions that you had seeing that?
Yes, it did.
Okay. So candle structure. I'm sorry. I was answering questions. I didn't. And believe me, what you did was perfectly fine. How you read a candle, these candles are giving you different bits of information. So, do you know anything about candle structure? Because you might know stuff, and I'm not aware of it. Do you know anything about candle structure?
No,
okay,
I don't.
So the red candle tells you that. So it's moving up. It's probably gonna come up to this target. So just in terms of candle structure, what candle structure tells you is information about price in a certain time frame. This red candle is telling me that price opened here, where this flat part is. This is called the body. Between here and here, the solid portion is called the body of a candle. And then the long sticks are called wicks of a candle. So what this tells me, the body tells me where the price opened. It opened here. It went up initially, came back down and met its opening price, and then continued even further down. And it came all the way down to here. But before it closed in that 15 minutes, it came up and closed right here.
Okay.
So a red candle means in that time frame, whatever time frame you're looking at, that the price of that candle ultimately closed lower than it opened. So it opened here at 76.93.50, but it closed here at 76.84.25. However, it had a higher high and it had a higher low. It just didn't close at those points.
So as far as the wick to the left of, or the candle to the left of it, right?
This one right here?
So those two don't correlate? So where that one closes, the other one doesn't open at that point?
So I'm sorry, ask me one more time, so make sure I understand what you're asking me.
So where that candle closes, right?
So this candle closed here, yes.
Does the one on the right open at the same price as the one on the left?
It opened all the way up here. Price jumped.
Oh, how does that work? Oh, so it just jumps up and then it records it.
It records it, yes.
Okay. So none of the wicks have any correlation unless you see some that have the same numbers.
Exactly.
Okay.
And so the green candle tells you information just in the opposite way. This green candle, this 15-minute green candle, opened down here, went down just a little bit, came back to its opening price, and then went all the way up here to the top of this wick, but closed a little bit lower. So the candle is green because it ultimately closed with a higher price than it opened. So red candles means the price always closed lower than it opened. Green candles mean they always closed higher than they opened. And with this candle right here is called a doji. A doji is essentially a candle that the price opened and closed almost at the same point. And sometimes they're red and sometimes they're green if they're slightly different. But you can have a red doji and a green doji, but this is a green doji. So essentially price opened here. It went all the way down. It came all the way up. And then it came all the way back down again to opening price.
So you can only buy or sell when it closes?
No, you can execute a buy or sell whenever you want, whenever you see it, an opportunity.
Okay.
Yes, I can hit execute, buy or sell whenever I want. However, tell my students you don't generally execute. I generally don't execute a trade unless it's on the 15, 30, or an hour. Because the market makes their strongest moves there. So like remember this 15-minute structure gave me information. Because I think I told you, I said when I saw this structure, I said, hey, this looks like it could be a buy. Did you remember me saying that?
No, I don't remember you saying that,
Okay.
but I do understand what you're saying.
So the 15-minute structure, like on a 5-minute, it's hard. This doesn't give me personally enough structural information, so I don't normally buy on the 5s.
But when
But
you
on
see
the
it,
15, that to me is a clearer picture of where the market may be heading. This doji
mm-hmm.
is considered indecision or a reversal. Indecision in the market doesn't know what it wants to do, and or a reversal. In this instance, I felt like it indicated a reversal. The market wasn't going to go down anymore. It was going to push back up, and it was going to try to grab liquidity up here. But on the 5-minute structure, I couldn't see that properly. On the 15,
mm-hmm.
much easier to see.
I understand.
And on the 30, even for remember on that on the Friday, on the 1 hour and or the 4 hour. The 1 hour is even better, but also the market makes its biggest transitions. Remember I said 15, 30, 1 hour, but also 1 hour and 4 hours. The biggest transitions are 1 hours and 4 hours, but you can also get nice transitions or on the 15 and the 30. So this was a 1 hour candle drop. Remember I told you 10 o'clock opened up? First of all, 10 o'clock is a 4-hour candle and a 1 hour candle. So when you have a double candle structure, it's very important. So the 10 hour is, of course, a 1 hour, 10 o'clock, but it's also a 4-hour candle because the candle goes from 6 a.m. to 4 a.m. And then the new candle, 6 a.m. to 10 a.m. And then the new 4-hour candle opens at 10 a.m. So if there's a reversal, there's a stronger reversal. So this structure, when I saw this big push down, generally when the new hour opens up, it's going to give you a better idea of what structure is going to come up next.
Mm-hmm.
There's a stronger either reversal or stronger continuation on the hour. So to answer your question, you can execute a trade at any time, but generally you want to do it when the market gives you more information, and it generally gives about structure, and you normally get bigger hints about structure on the 15, 30, 1 hour, and 4 hour.
Mm-hmm. I understand.
Okay. So we just went over general candle structure, ticks, how ticks are counted, how you make your money, the futures market, trading view. So this platform that you're actually trading on is called Ninja Trader, is what I prefer to trade on. There's other accounts. There's Trade Profit accounts. There's not Take Profits, Trade-Evate accounts. I tend to like Ninja Trader just because it's what I learned on, and it could just be because something that you learn on is generally easier than learning something new. But what I do like about Ninja Trader is I can stack various prop companies together. Like in theory, you could trade multiple accounts. So for example, in theory, just think about it. I just showed you what you could have made on one prop account, right?
Mm-hmm.
The $1,000 that you made on Friday. So you made $1,000 on Friday in one account. I could trade up to 5 accounts with Take Profit and another 5 accounts with another company, My Funded Futures. And I have 10 accounts, and each account I made $1,000 in. So in a day, you could have made $10,000. Exactly. In Trade-Evate, you can't stack various prop accounts like from different companies. You can have, let's say if you have 5 accounts with that one company, you can do in Trade-Evate. But what you can't do is trade across other companies in that platform.
Mhm.
So with NinjaTrader, I do like having the ability to trade multiple prop firms at the same time. Because in theory, you could have 20 accounts. You could have as
And you
many
can make a
accounts as
lot
you
more
want.
money.
You can make tons of money, hun.
Mm.
Trading, if you get it and you get good at it, it can be extremely lucrative. But it does take time and it does take practice. Because there's other things, like I'm just kind of giving you the basics right now, but and it's at night and it's slow and there's, and not that that's bad. If you were trading right now, cool. Like you could have easily just made, what did we do? If we got in here, 84, it's kind of plain right now, but if you just went from 84 to 89, that would have been 5 ticks. Where's my calculator? 5 times 4, it would have been 20 ticks times 12.5. You gotta make $250. That's not bad. Who makes $250 in 30 minutes?
Not very many people.
Not very many people. Like, yeah, you could have made $250 tonight. And so if you get good at it, but there's a lot of things you gotta, especially if you're trading live in the morning, not, and when I say live, not that this isn't live, but in the morning when the market is open, it's more fast moving. Like the moves happen very quickly. But you also get the chance to make more money. It's more volatile, but you can make more money, as well as it also lends itself to lose more money. You can make more money, but you can also lose more money because the market's moving very quickly. And there's other things like as time goes on, we'll talk about market manipulation. We'll talk about finding liquidity, where there are buyers and sellers in the market. We have like 5 minutes and I can say that a little bit. I'm going to show you. I'm going to go to the 4-hour. So do you see how these 4-hour candles, there's huge wicks on top of these candles? They kind of have short bodies, but long wicks. That's really a dangerous zone to be in, trading where there's these long wicks. It means there's a lot of selling pressure. So even though I got in a buy on Friday, right after it hit my target, essentially the market just came back down. You see that? So it was 10 a.m. By 11 o'clock, it went up a little higher. It went higher to my target. But after that, the market just kind of went back down. There's a lot of selling pressure in the zone, which can make it highly difficult to trade. So even though the market moved up, there's a lot of selling pressure, which can lead to manipulation and being difficult to get in a proper trade. If I go to the 30-minute. Even here, this is a good illustration of it. So even though I knew the market was going to go up, if you look at 9, I'm going to go to on the 30-minute, you can still see it really well. At 10 o'clock, the market went up, but it did what? It went up really quickly and it came right back down. You could have lost, like, let's just show, this wick accounts for the top. What's the high? The high is 76, 80, 50. And the bottom right here is 76, 8. Oh, I did that wrong. The high was 69. I read that wrong. I'm sorry, honey. The high was 7690 75. You see it, 7690 75 was the high. However, it closed at 7681 75, which is essentially 9 points. So we just did the math. 9 points times 4 is 36 ticks times 12.5. So that's $450.
That you lost.
Sorry, say that again.
I said $450 that you lost.
That somebody could have lost. Yes, because the market was super, it gave you the indication, right? It tricked you. Because if you were like, oh, I'm going to get to buy it, the market's going to go up. But you got in too quick. You could have easily got in and lost 400, up like roughly $400. Does that make sense? Because it did a fake out. It did a fake pump up and then came right back down. And it did it very quickly. And you can see it a little bit better. That was on the 30-minute. Let's see what it looks like on the 15. So that was here. So here, 10 o'clock, jumped up, came down, then it played a little bit, it jumped up, played down. Not only did it play come down, it went even lower at 10:30. It came
Hmm.
way far down. So you had to do your timing just right to get in and get in the real move up. But you had to be patient and you had to wait it out. So you had to wait, even if you thought it at 10 o'clock, you had to wait till all the way till 10:45 before you got in the true move, because you could have ended up losing hundreds of dollars. Does that kind of make sense?
Yes, it makes sense.
So the morning can be more lucrative, but you got to be patient. You got to have
You have to be vigilant.
you have to be vigilant. Absolutely. Because I can guarantee you lots of people lost money between 10 and 10:45 because they got into the move too early and they were over leveraged with their size accounts, with their contract size. So remember, and it's 7 o'clock, and we probably should stop here. But the one thing I'll say is, do you see? I want to show you. We're looking at the ES chart, right?
Hmm.
But when you go to my Ninja Trader, I'm actually trading on the MES, which is a smaller version of the ES. So I start not with a full contract. So remember when I said you make $12.50 per tick?
Hmm.
Generally, when I enter a trade, I'm entering in on the MES with 5 of these, which is essentially half of the ES. And so instead of $12.50 per tick, I'm really making $6.25 per tick. And then if I'm confident, I start there at $6.25. And then when I'm just going to get in it so you can kind of see it. This is a 1 hour. Let me see what the market's about to do so I can just show you really quick. 1 hour. I think the market's going to go down now. I don't think it's going to go up. But I could be wrong. So I'm going to get in a sell really quick. To me, I'm going to get in a sell just so you can see something. So let's say I'm going to get in a sell. So I start here. I'm still in my sim account.
Order filled.
All right, I get in a sell. So it starts out where I'm only in half of the size. But let's say the market starts to go in my favor. I can easily just hit sell again. And I go
Order
from 5
filled.
to 10. I go from 5 to 10 contracts. And now I'm still in a whole $12.50 per tick. But I started out halfway so that I'm gauging my risk. And I'm only adding to my risk once I'm sure. And then I go into full contract.
I understand.
Okay. All right, hon. Well, that was our first session. If you're available, are you available on Wednesday evenings?
If I'm not mistaken, things may change though.
Okay. And if you are, just let me know, or aren't. That's cool. But I'll see you on Wednesday night unless I hear otherwise.
Yes, ma'am. Nice to meet you.
All right. Nice to meet you, Simeon. Have a good one.
You too.
All right. Bye-bye.
Order filled.